All right. Hello, everybody. Welcome back into the NASDAQ Options Superstars program. We did issue a new trade alert this afternoon, so I thought I would record a short video walking you through the thought process behind the trade, how we took it, and what is our plan for this trade over the next few days. Before we get into that portion of the video, let's talk quickly about this market as a whole. If you've watched any of the recent videos, you guys have heard my explanation on what we've seen lately. We've seen a lot of big range intraday, but we haven't seen much follow through in either direction. We've seen some pretty big moves both ways, but on this daily chart, there's no follow through. It's just back, forth, and we continue to hold the same support and resistance levels. On the downside, next area to watch is if we get down and test 284.44. It's that 200 period moving average on the daily chart of SPY. That would be a near-term target. Volume continues to be good, not great. Ideally, long-term, we want to see the daily volume on SPY between 80 and 100 million shares. Anytime that we're inside of that range, it makes the fill prices much easier. Now, I realize we're not trading the shares of SPY stock, but it's a pretty good gauge. If you have good volume on SPY, on the shares of stock, you will typically see pretty good volume on most of the products that we trade on the option side. I definitely want to see that volume spike back up here over the next few days. In order for that to happen, we will most likely need some selling pressure. So I'd like to see that take place. So 284.44 is our area of support on the downside. Our resistance, you can see all of the moving averages just up above us. And then we've got that 294 level that's held a couple of times beyond that. So those are our levels that we're watching here over the next few days, with the indecision here really continuing to lean towards trading the vertical spreads. It's certainly more a conservative approach, but I think that's what the market's giving us right now. It's very, very difficult in either direction right now because the lack of follow through is telling. We had a big gap to the upside this morning, and we've basically spent all day long selling off. And if I take a look at the internals, you can see we spent most of the first half of the day selling off. We did get a little bit of a bounce between 12:30 and 3 o'clock, and now here we are again selling into the close. A lot of indecision out there. This is not the time to be a hero. I keep saying that in these videos. What I mean there is don't try to press it with huge position sizes. Don't try to press it just with long calls, long puts. There will be a time and a place for that approach. It's important to take what the market's giving us. Don't try to force the market to do something it does not want to do. If you noticed in the trade alert that I sent out on Baba today, you'll notice I only took 2 spreads. That's a smaller position size than what we typically take. I'm just trying to be cautious here, given the indecision in this market, given the back and forth that we've seen. We definitely want to be more cautious here for the time being. So if you have any questions on my outlook, I continue to try to point this stuff out to you guys because I want you to get a feel for why we're taking the trades that we are. As much as I would love to just buy long calls and long puts, it's way easier just from a marketing perspective from us as a company. It's way easier, to come in, continue to focus on long calls, long puts, go for those home run trades. But that's not the best use of capital right now. We definitely want to pay attention to that risk here. Very, very important. Let's talk about this chart of Baba here. Why did we take this trade? This is a 195-minute chart. This is the main chart that we like to use for our setups. It gives you 2 candles a day instead of 1, like you would see on a daily chart. And one of the histograms down at the bottom is our sentiment indicator, and it went from green to red a couple of days ago. That had us looking for a potential short trade. Now, I wanted to wait for price action to confirm. It did start to break down. We did get all of the moving averages here pointing down. We had some crossovers here, the moving averages as well. Everything confirmed, and this was the basis for the trade. Anytime that I have a red to green sentiment indicator down at the bottom, that's step number 1. I want to wait for price action to confirm by breaking below our moving averages up top. If I can get the moving averages to cross over, that's even better. It's further confirmation. So that's what gave us the short trade here. That was the thought process behind the bearish position. And let's take a look at the trade page and walk you through what we did. We went out and we used the September monthly options. Those are now down to 24 days left to expiration. And we decided to come in and buy the 165, 160 put spread. For those of you that are newer to a vertical spread, what that means is that we're buying the 165 put and then we're selling the 160 put at the same time. In the alert I posted earlier, we're looking to get filled between, well, actually, I posted in the alert $2 or lower. So I want to get filled. I want to buy this spread anywhere below $2. So I heard a number of different fill prices come in. Anywhere between $1.85 and $1.95 was the range that I saw. We got filled at $1.90. What we're looking at here, anytime that we're buying an option or buying a spread, our initial target is to double our money. We're looking for 100% return on the position. We're willing to risk 50%. So if we got filled, let's just call it $2, just to keep this example simple with a big round number like that. Our stop would be at $1. I'd be willing to risk $100 on that trade. Our maximum profit potential would actually be $3 per spread. But since we paid $2, I'm looking to close this thing out and book $2 of profit potential. That's if you got filled right on top of $2. So what is the goal of this trade? Ideally, I want BABA to move lower. I want it to stay below 160. And we've got 24 days for that to happen. So that is the whole basis for the trade. That is how we're going to manage it. You can see here the risk reward scenario. My maximum profit is $315 per spread. My max loss is whatever we pay to put this position on. Okay, so it's trading for around $1.83, $1.85 mid price. We got filled at $1.90. So here's the actual profile of our trade. We've got $310 of profit potential, $190 of risk. And we'll see what happens here over the next few days. Ideally, I would love this market to roll over to the downside. Even though we do have a few bullish positions on, I want this market to head lower because I know in the near term that's going to cause the volume to head higher. It's going to cause the volatility to stay elevated. And when that happens, that opens up the playbook. It makes life easier for us as options traders. So that is the trade on BABA. And actually, let me pull up Tastyworks here a second so I can show you how to place the trade inside of the Tastyworks platform. All right, so I've got the Tastyworks desktop platform loaded up. And what I'm going to do is come up to the top of the platform. In the symbol box, change the symbol to BABA. That's going to pull up the trade page. If you don't see the trade page on that vertical toolbar towards the left-hand side of your platform, you're going to see a box that says trade. If you click on that, it'll take you to this trade page where it shows the different expiration cycles that we can open. So from the trade alert, I mentioned that we want to use the September 20 monthly options, the ones with 24 days left expiration. You can see that number right there in the middle of the screen. And we want to buy the 165 put and sell the 160 put at the same time. To do that, we're going to come over to the put options on the right-hand side. If you don't see enough strike prices there, you can always click on the drop-down menu in the upper right-hand corner. You can load up more or less strikes there, just depending on how you want to visualize things. Well, if I want to go ahead and buy the 165 put, I'm going to come down to that 165 strike, and I'm going to left click on the ask price of that 165 put. That's going to box that strike price in green, indicating a buy order. I also want to sell the 160 put at the same time. So I'm going to come in and click on the bid price of the 160 put. That's going to box it in red. What that does, down in the bottom left corner, you're going to see this order broken down where I am buying 165 put. BTO stands for buy to open. And then I'm going to sell one of the 160 puts. STO stands for sell to open. We're going to do this all at the same time. It's going to be done as one trade. In the middle box here, we can change the price. Remember, I want to get filled $2 or lower. So if you want to adjust the price higher or lower from here, you can certainly do that. We recommend that you start out with price at the mid price. The mid price between bid and ask. You can see the mid price shown right down on that price ladder. You're not guaranteed to fill there. If you can't get filled, you can always adjust it up a few pennies. Adjusting it higher will allow you to get filled faster. Adjusting it higher when you're creating a buy order is going to increase your odds of getting filled. You can change the quantity here. You can arrow up or down to change the quantity. As I click on those, you'll notice that the number in the order box is changing. And then once you get everything set the way that you want it, you'll want to make sure it's set to a net debit. We are paying to put this position on. And then time in force, make sure it's set to a day order. We do want to use day orders for entry orders. You can use GTC or good till cancel orders if this was a closing order for a target or a stop. I don't have a problem changing that to a GTC, but in this case, because it's an entry order, highly recommend that you use a day order. That way, if you don't get filled today, the order will cancel at the closing bell, and then you can always reevaluate the trade tomorrow morning. That way you don't get filled or you don't get hurt by any type of a big overnight gap tomorrow morning. So then you just click on review and send the order, and you're good to go. So we'll keep a close eye on BABA. It is a bearish position. We are looking for a further move to the downside here over the next couple of days. So we'll see if this overall market decides to head lower for us. Real quick, we do have a Q&A webinar coming up tomorrow. It is going to be at 2 p.m. Eastern. There are login details that I posted on the owner's website. I'll email them out again here this evening, just as a quick reminder. Would love to have you join us. If you cannot attend live, we will record the session and we'll get that posted for review here sometime tomorrow evening. So again, 2 p.m. Eastern time. Would love to have you join us for our Q&A webinar. All right, so I'm going to wrap this video up here. Enjoy your evening, everybody, and we'll talk to you here tomorrow for our next round of new trades.